This is Damon Stevens with Finland Publish. Today is Thursday, September 29th, 2022, the stock market update for trades of the day. And boy, the market decided with the news that came out that it was going to open up down today and just went down all day today. So hopefully you're able to catch some of that on the downside here. Obviously, the market's still trying to figure out which direction to go, and it continues to show us that it's hanging around the bottoms. So what does that mean as we close out this month, and what's going to mean for this next quarter as we end quarter 3 and go into quarter 4 next week? Let's take a look at and see what's going on in the market and see what we can do and what we can learn as we prepare for this closeout. So looking at the market today, Dow Jones closed down 1.54%, Nasdaq down 2.84%, and S&P 500 down 2.11%. Pretty red across the board except for energy. You can see here there's a couple in energy that were doing okay. In financials, there's a couple, but overall, most everything else was red today and selling off. So you can see here off our scanner, nothing really hit the scanner today either. Obviously, if the Russell 2000 small caps is down, typically there's not going to be a lot of good plays out there, either in small caps. Looking at the future, so let's take a look at the future. Right now, you can see here on the future, this is live, 24 hours a day. You can see here back on the 21st is kind of where we put this bottom in right here. And today we put it in and actually spiked below it. And actually, as we're live in the market, you can see that we're hovering down here towards making new lows. Now, as long as we can hold the support line, it's great. But if we don't, we may breach and come down here. Now you're talking about 34.65. And if it really kind of fell through, you're talking about 32.70 down here at the bottom. So can the futures hold on and give us a positive Friday as we close out this quarter and this month? It's hard to say, but if it does close out much more negative, obviously that means we're going to October, setting the tone for October to be pretty low. And September is typically a low month anyways. It's usually the lowest month in the year. So we kind of expect that, but October, especially by mid-October, if we're not seeing a bounce out of it, it doesn't set up well for a year-end rally. So we'll see what happens in the market, what kind of news we get tomorrow morning before the market opens from the Feds, and see if that gives any type of benefit or catalyst to move in a positive direction in this market. Looking on the hourly, here's hourly now. So you can see on the hourly, we did put a higher low in here. And then you can see this is kind of still showing a lot of weakness. So as long as we can stay overnight, putting higher lows in, we have a better chance for a bounce tomorrow. If this starts to put lower lows in and we break that back down here, then, more than likely we're going to expect the market to be down tomorrow. And if you're looking at the overall, what's coming out tomorrow, we have core PCE, price index numbers coming out. We have PMI, and then 5-year expected inflation coming out. And then also we have Fed Gov Bowman speaking in the afternoon. So let's take a look and see what that's going to. So just be prepared for any movements that can happen with those areas as we go into Friday. And again, we cover this every day, but basically the sentiment, is more people shorting the market. It's like a record number of shorts in the market. So those people who thought the market was going to come down and has been shorting it are definitely getting paid and called it correctly. If you look at S&P 500, these are all the stock companies in the S&P 500 above the 50-day moving average. And this is a good indicator for kind of knowing overall how the market's doing. If companies over 50-day moving average, if their stock is, typically that's a positive thing, and that's very bullish. And so you see a lot of momentum here, and you can see back here, this is June lows. And then we got that nice rally, and we went from less than 1% of companies in a bullish momentum clear up to 92, which is high, really high compared to the average. Looking back here, here's the 93. That was back in April 2021. But you can see here we've kind of pulled down, and we're down here in these lows again, June lows. We've been hovering down here now. This is 5 trading days. Last time we were down here, we had what, about 8 days, 7, 8 days here before rallying back up. So, you know, we're at 5 days now. So do we get a couple more days down here and maybe we start to rally back up here in the market? Or does this, you know, remain weak down here? But you see down here, we're kind of hovering between, you know, basically 2 to 5% of all companies in the S&P 500 in a bullish momentum. So for the most of the market, they're all down, hovering down here. And you see that this is typically the low. I mean, obviously, I'm going to go to 0. But you can see that, you know, lows here was December, you know, 2018. This is March 2020. So all these, the pandemic lows, anytime we've had, you know, this bear market, that's kind of where we're at. And you can see that now that we're in 2022, you can see we put a low in here, and this is our second low. So something just to keep an eye on. As you see these spike up here like this, it begins to show you the signs of bull rally. So that's why kind of look at this chart and keep it in mind. The other thing that helps us as well understand kind of the overall market is HYG, so high yield corporate bonds. You see here we're kind of hovering down the bottoms, and that's kind of where we're back in June, July, before rallying back up. And so it's trying, but you know, it's definitely showing still weaknesses there. The other indicator we have to kind of keep an eye on, you know, the market and possible rallies is TLT. You see TLT kind of put a bottom in a couple days ago, and it's trying to rally back up, but it's still showing some weakness here. And so if this 20-year Treasury bonds can take off, you know, that's a good indicator for the market that we can start to see a rally come in. And, you know, if you haven't subscribed, definitely subscribe to our channel, and that way we can continue bringing this content to you. We do live streaming as well as, you know, these nightly updates to keep you up to date on what's going on in the market, what we're looking at, what we're trading, and hopefully provide some educational material for you as well. And then we also have our website, finwealthlive.com. And there you can join our free non-member chat and daily watch list, where we post our watch list before the market opens, what we're getting into, when we're getting out, and when we're booking profits. And so it's helpful. It's more detailed typically than what you may see on most watch lists, which is just a list of stocks to keep an eye on. So we tell you what, you know, what the short looks like and what the long on each stock looks like. And so definitely join us there. And if you want to join our member team, you can just click on this login here and join part of our team. And if you do, this is the dashboard you'll see. So you'll see your access to live trading courses, master course. We have a course out there also that has about 16 different modules in there, different types of techniques or trading techniques that help you to kind of know, you know, possibly new ways of trading. If you're looking for something new, or maybe you're new and just trying to figure out what kind of trader you want to be, we cover that in our courses. Now, obviously, there's hundreds of ways to trading. We kind of cover just the core, but helpful. And if you want more training courses or others that you think are helpful, we're always open to adding more to that group. We have group training, also one-on-ones. You know, one of the things we did with a couple one-on-ones lately is looked at their computer setups, looked at their trading setups, and try to tweak them a little bit to help them, you know, be more optimal for trading in the market. So with that said, let's get into actually some charts here, take a look at what's going on. So First Solar has been really strong, especially with this market, this down market. First Solar just continues to climb up here. And you can see here on this daily chart that, you know, we did have this pullback. We had this run up here. We've been consolidating here on First Solar. And we almost got a breakdown here, but it held the 20-day moving average. We want to see if that can hold. You know, the thing is, I don't like this long-term consolidation. Typically, you know, if you have a short-term consolidation, that's, you know, getting energy to boost and break it to the upside. First Solar has been kind of sitting here a long time. Now, it could still break up here if we can get some better news or some information that's kind of helpful around, you know, the energy sectors. But if not, you know, this is possible this could pull back here at some point. So I'm keeping an eye on that 20-day moving average, just seeing if it breaks. But right now, First Solar has been kind of holding up there when the others have been not so well. Netflix is another one that's done really well from after it's hit its lows. And you can see that it just kind of slowly is just grinding its way up. You know, you can see here that we're sitting right here under the 100-day moving average. And then we also have this resistance line up here, which is this pivot from this pivot 252. So if we can just continue either grinding up, this is a great stock to hold on to, you know, may get back towards, you know, filling some of this gap, this huge gap area, basically from 252 to 330. If we can start to fill that, that can give some great momentum to moving this stock. So we do need the market conditions though to improve. Otherwise, you know, we'll take this grinding up here of Netflix. Netflix has had a really couple good days, at least day trading days recently. Amazon, it pulled down, you know, past our wedge here, broke out to the downside. It's still within our deviation bands. And it's sitting here kind of in this little range here above support and, you know, below this resistance line. So we're really looking for a breakout above 118 or a breakdown below 112 to kind of get momentum either on the upside or downside. Otherwise, it's kind of range bound for now. Tesla kind of is in a range bound as well, but it's a little bit wider range. You can see here where Tesla's just kind of going up and down through this range here. Just trying to find some direction between this 265 and this 314 area. So it's pretty broad. If you know where, if we can get this bounce, you know, you can usually typically on a range, you can short to the top of the range and go long on the bottom of the range and just kind of, you know, scalp trade up, you know, or it's more of a swing trade on a daily chart, but just swing this back and forth. But you have to be careful. If you break any of these lines, make sure that you're not in a trade in the opposite direction. Right now we're back at the bottom, kind of this area. 265 really needs to hold. If we break 265, we're going to come down in this next range area. So we need to kind of keep an eye on that. If not, you know, expect, you know, we spend a few days and then we bounce. And so we'll see if we can get a bounce here sometime on Tesla in this range. Apple kind of pulling down, kind of consolidated for a little bit and now broke down weakness. There's bad news coming out about the iPhone 14 and China that's affecting Apple now and bringing it down. And that hurts the market. It's a market leading indicator. So with Apple coming down, it's going to drag down the market, and it's possible it could come down here. Our trend line, lower trend line here is, you know, it's 140 area. It's not down there yet, but you know that would be where we should hopefully find some support and get a bounce back up here. But you know, last time we hit this support line, it was a couple days before we got the bounce. So looking for possibly some more downside. We do have a gap, you know, a little gap to fill up the upside, but we'd have to get back above 148 to start running at. I don't see any strength in Apple coming in anytime soon unless the market moves. Nvidia. So Nvidia has been pulling back here. I put this on a 1 week chart just because Nvidia is below all the moving averages, including on a 1 week. But what I do like is if you take these pivots, this is kind of the top, and then you take these pivots down here, this is a bottom. And actually, you know, today it looks like it came down off this pivot line here and tagged this. So does it find support here? Possibly. It might come down a little bit further, maybe down to, you know, this 402.80 area before bouncing. But if it can hold right here on this trend line, then hopefully we get a ramp back up here. A lot of it depends on the market. You can see this was a big, huge consolidation area. But you know what I didn't like about Nvidia is it broke down below this breakout area. And usually stocks, they'll come down and revisit the breakout area and then bounce. But we kind of got below it. So I'm not sure if Nvidia is going to break down further here. So just something to keep an eye on. But, you know, this is a good support area. So we'll see if it holds. Looking at U.S. bond 10-year yield, you can see that this pulled back. This is helpful for the market. We talked about this, you know, the last few days. You know, we got up here, up at the top of our deviation bands, which we hadn't been at, and obviously got the pullback here. So we're on support here on our moving averages, all above all of them. So if this holds and continues to go up and make new highs, it's great for the bonds, not good for stocks. 2-year yield, same thing. We hit that new high, came up here, hit the top of our deviation band. You see that we got close to it back in June. We're backed up. We tagged the top of it, and then we pulled back. So we'll see, you know, does that hold, and can we come back lower, maybe down to the 20-day, you know, around 4. This is really elevated. This is crazy that it was back up here. Thought for sure maybe we're gonna bust through this and hit 450, $4, 4.5% here, but we didn't yet. But we're down here on the support line, and so we'll see if this can hold and it continues climbing up, or if we can get a little breakdown, which would help stock market. Look at the dollar pullback, which is helpful too. That means money's flowing back in somewhere. Definitely today it was not going into the stocks, but you can see here the dollar's come back down towards this little wedge here that we broke out of, and you see back here this little pivot. It's kind of where that trend line came from. We broke up and out to the max, up to our top deviation bands, which we hadn't done. You can see down here hadn't broken out. Now we hit the top, spiked it, and now we come back down and retraced about 50% of this move almost, from this level here back in 21st of September to here. So we'll see where that takes us from here if we just continue to grind up. So that pullback obviously helped gold. So gold rallying up here. This is good. This is very positive. So we have resistance coming up here about 1680. You can see here this little consolidation there where we broke down, created a bear flag. It's almost where we're at now. So expect some possible resistance here and a little bit of struggle to break through. On the VIX, we spiked up this upper resistance line here, which is where this pivot was back in June, and pulled back. So hopefully we can continue pulling back further down. That would be great. You see here last time we tagged it, we kind of had a flat day and then a pullback, and then we went back up, and then we pulled back and ran down. So do we create a similar pattern? You can see here last time we hit this top line, again, this one just kind of went down from there, came up, retested, and then we kind of fell off. So we'll see what happens here. Trying to figure out what it wants to do. But right now, still pretty elevated. As long as it's above 25, really you want below 20, but above 25 still creates volatility in the market. So the SPY on the daily chart, we're going to look at a couple different charts. So daily chart, it looks like we're consolidating down here. So we're kind of in this little range here. So we kind of broke through, hit a base, kind of chop back and forth, and now we're in the lower part, which typically I don't like to see because that's showing some weakness. We very well could break through here and come into a whole new area, and maybe down to some of these lower areas, maybe 350 down to maybe 340. So we'll see if we can get a bounce here off where we're at right now. We may just consolidate down here for a while if the market can't figure out where it wants to go here as we get into October. Looking on a 1 week, you can see we're right here on this line, which is where this pivot was. And so we can see if we can hold this. If not, our lower deviation bands here, 350, 33. So we very well could come down and revisit that based on what we're seeing in the futures as well. Monthly, that would break though the 50-day moving average, which means then we could very well come down to the 100-day at 303. So we really do want to hold this if we can. I mean, ideally, you do not want to break and close below 360.87. If we break down and close below 360.87 tomorrow, that'll be either a trick to trick traders to come in and short the market, and then it's going to bounce next week, or it's going to show that we have additional weakness, and we're going to probably go down a lot further as we get into October. On triple Qs, we can see here we hit the bottom and we bounced and closed higher than down here. So that's what we're talking about. We want to see that we do tag the bottom. It's okay as long as we bounce back up, and then hopefully maybe this becomes a big W at some point, and maybe this is a bottom, but don't know for sure until we get into October a little bit here. IWM came down, spiked that low as well, shot back up yesterday, and then today's down a little bit towards the bottom of this candle, but still within that candle range, so it's still engulfed. That's how we want to keep it. Hopefully this can run back up towards the top of that candle. Financials, we got 1, 2, now 3, and actually this is 3 days, not just the days here, but 3 days down here at the bottoms, trying to bounce off here. The longer it stays down here, the more it's going to show more of a bear flag and probably drop to lower prices. So really need to get a bounce going here, like you saw, here 2 days up, 1 day up, and we're kind of like grinding down. So that's a little bit different pattern that we're seeing in the financials. Bitcoin kind of trying to get back up here towards this wedge and break out. You can see it's continuing to have resistance here. Been finding support, trying to get some momentum here, but you can see it's just kind of chopping through. So we're either going to break down here for Bitcoin, below 1800, 18,000, or, we got to get going above 20,000. So it'll be interesting to see this weekend if Bitcoin just, remains flat here for a while. Ethereum, same thing, just kind of grinding flat, just flat to up, but still not above the any of these deviation bands. And or the moving averages. You see the moving averages are coming down to meet Ethereum. So maybe once they come down here, maybe Ethereum can get a little bounce. But right now, showing weak and flat. So we can just kind of continue to monitor that. That's our stocks, our cryptos, things we're watching, things we're looking at in the market. Kind of what we're kind of keeping an eye on. We're kind of really at a critical point right now in closing the month and the quarter, and now looking into a new month and how we're going to finish out this last quarter to get some direction on the market, whether we're going to be weak or whether the bulls are going to kick in here and get us moving again. So just be careful trading out there. Definitely join our non-member chat and daily watch list if you haven't. And if you do want to join us also each day and within our group, then also you have the opportunity to join our membership. So stay safe out there. We'll talk tomorrow night and see. Well, actually, tomorrow, not tomorrow night, because tomorrow's Friday. So everybody have a great weekend, and we'll talk Sunday night as we prepare you for the week to come up. It's coming up. So stay safe out there and enjoy your end of quarter and end of month.